Hello, everybody. Welcome to Monday Morning Must-Knows. My name is Merlin Rothfield, and here are three important things to pay attention to for the upcoming trading week. Now, you're probably wiping your forehead after that crazy week last week. Overall, we were only down around 2% for most of the major market indexes, but 4 consecutive down days of a lot of pain across those indexes, as well as in commodity markets. We saw gold and silver also take a dive, and tech really getting hit hard. The question is, will that fear persist in this upcoming trading week? And what is coming out from an information perspective that we should pay attention to? That, my friends, is where I'm starting today. Of course, we're going to start with the earnings calendar as we usually do. And sadly, not a lot of huge names, although there are some that you might recognize. So let's start things off. 406 companies reporting this week. I think we had 1,800 last week, so a lot less, but there still are a ton of retailers coming on the heels of that great retail sales number last week. Start things off on Monday. You've got Zoom, conveniently enough, requesting all their employees come back to the office when they have a remote working teaching platform. Kind of strange one there. Tuesday brings you Lowe's, Macy's, Baidu, Medtronic, Urban Outfitters, and Dick's Sporting Goods. Wednesday, you've got NVIDIA, NTAP, Abercrombie & Fitch, Kohl Stores, Advanced Auto Parts, Foot Locker, and Autodesk. The real exciting part here will be NVIDIA. So much hype on the AI segment of our market, and AI is being led right now by NVIDIA. People are thinking it's way overbought. Others thinking it's extremely undervalued. We'll find out on Wednesday after market close with NVIDIA. That should be a very exciting moment for any trader out there, whether you're in it or not. Probably want to be out of it, though, just because the volatility could just tear you apart on that day, so be careful. Moving on to your Thursday session, a bunch of other big names. You've got Marvell Technologies, Ulta Beauty, Workday, Nordstrom's, Dollar Tree, Burlington Coat Factory, and Intuit, and a lot of eyes on Workday as many people feel that they may be going out of business here at some point in the near future. And there is nothing happening on Friday, which means that that is your entire earnings calendar. So there might be some names on there that are influential to you. I think that what happened with the retail sales numbers might indicate some optimism here for some of these retail companies reporting this week. All right. We're going to move from earnings calendar to macro picture as we typically do. We'll talk about services and manufacturing data. Now, there's a lot of stuff coming out this week. Once a month, we get this deluge of information, if you will, and it really starts across the pond with France. On Monday, starting things off at 3:15 in the morning, France comes out with their services and manufacturing numbers. 15 minutes later, we get Germany with theirs. 30 minutes later, we get the whole EU. Another 30 minutes later, we get England, and then the United States rolls out with their services and manufacturing numbers at 9:45 Eastern Time. Now, I'm not saying that this is a tremendous market mover, but we still need to understand where this data is going, where it's come from, what are the trends going on in services and manufacturing. As I've been saying here for a while, I understand that manufacturing is not the stronghold of America, but it certainly does bring in jobs. It's a contributor to our economy and to our GDP, and seeing that rise and increase and gain strength is a good sign for our economy overall, even though it's not our main focus in the United States. So anyway, that'd be a good day for announcements, especially if you're trading the euro or the British pound or the US dollar currency pairs. There might be some activity there. And finally, housing, another really important sector to keep an eye on because of its contribution to GDP as well as the impact of rising interest rates on housing. We saw the 30-year fixed rate mortgage creep back above 7%, which has a lot of people feeling rather nervous. And given the trend, it may go even higher from there. So let's talk about new home sales, which comes out on Wednesday at 10 a.m. Eastern Time. As you can see by this chart going all the way back into 2014. From 2014 all the way to 2021, we had a very nice uptrend in new home sales. And of course, after the pandemic, when everyone was getting these stimulus checks, you saw it surge to over 1,000. Gotta love that. Well, we took a big dip between mid-2020 and 2022. But what's noteworthy for me is how we've been creeping back up. We've actually been on a nice uptrend. And you notice that the second from last bar there, I'll put a little red box around it so we can see the most recent data. That red box is kind of encompassing the last 4 months of data for new home sales. And you can see there's one spike that really surges higher than all the others. It totally exceeded expectations. And that had a lot of people feeling extremely optimistic, although 1 point data does not make the trend. And then the last bar you see there on the hard red edge, we actually missed expectations. So while the little dash marks there do show a consistent increase, the actual numbers have been fluctuating wildly. And I am one of those that believe that the current rising rate environment is going to start to hurt this new home sales trajectory. I don't believe you're going to see this uptrend continue much longer, especially if we start to see mortgages get to 7.5%, 8%, 9%. And of course, we are hearing more and more about the Fed is concerned about inflation going forward. If that is in fact the case, then we can expect by the end of the year another 1 or 2 possibly rate increases in the Fed funds futures. That would mean that those rates are going to be increasing on the long end as well, and therefore we might see by the end of the year an 8% mortgage, and I think that would really start to hurt the housing market. It's been slowing it down a little bit, hasn't stopped it, but I think the higher we go, it's like putting the brakes on the housing market. At some point, it will stop the growth of that segment, and that could have dramatic impacts on our economy. So there's 3 important things to pay attention to the upcoming trading week. You got manufacturing and services, a bunch of earnings, and the new home sales. So my friends, be very careful out there. I hope you have a fantastic trading week, and we will see you next week.